Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 14th of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Alright, without further ado, let's look at the overnight changes and price moves to be aware of. Somewhat calmer on the world's foreign exchanges yesterday, though we did see some movements, but perhaps not in the direction that we might have expected. A bit of pushback from one or two currencies against the US dollar. First of all, the New Zealand dollar adding a very creditable 0.34% against the greenback to trade at 65.9950 shortly before we recorded the video. The Mexican peso also adding 0.28%, or gaining I should say 0.28% against the US dollar, and the South African rand clawing back 0.85% against the American currency after its slide in the last couple of days. Dollar index though 96.35, largely unmoved on the day yesterday, down by a mere 0.04%. Markets do seem a little bit calmer this morning. Turkish lira is back around 6.89 to the dollar. All eyes now on whether the Turks will release certain pasta that they're holding, and whether the Americans will make some kind of trade concessions to them. Okay, what's on the calendar then? Events that may move the markets today. First of all, we've already had data out of China at 2 a.m. GMT this morning in the shape of retail sales and industrial production, and we'll look at those numbers in a bit more detail momentarily. And the main focus then is in Europe today, with all the high impact data coming out this morning. At 6 a.m. GMT we will have GDP out of Germany. This is for Q2 of course, and that'll be accompanied by harmonised index of consumer prices, HICP, for July. That's the ECB's preferred measure of inflation across the Eurozone. So German inflation data obviously very important, and the GDP numbers also perhaps providing an insight into what will happen in the wider EU data later on in the morning. At 6:45 we'll have CPI data out of France for July, and then at 8:30 claimant count data for July from the UK alongside average earnings and the ILO employment rate for June. This data of course will go hand in hand with tomorrow's inflation data in sort of giving the markets an insight into the health of the British consumer and the economic situation in the UK. Then at 9 o'clock we'll have ZEW economic sentiment and current situation data out of Germany for August, but that's trumped somewhat by the GDP data from the wider Eurozone, which is also due at 9 a.m. Again, this is year-on-year data and Q-on-Q data for the second quarter in 2018, and coming out at the same time as the GDP data, Eurozone industrial production data for the month of June. Of course, remember we saw some fairly disappointing German factory orders data for June only a week ago, so it'd be very interesting to see how this wider industrial production data stacks up. Okay, well then, breaking news and comment that's caught my eye overnight. First of all, then, the US 500 and US 30 indices have fallen for a fourth day as the fallout from Turkey unsettled investors. The White House has told Turkey that it has nothing to negotiate without the release by Turkey of Pastor Andrew Brunson, so the ball, as far as US sanctions are concerned, being firmly put into Turkey's court. Meanwhile, Chinese retail sales and industrial production data has missed forecasts, raising concerns about a broader slowdown in the country. You remember the trade balance data was pretty good recently, but PMIs have raised question marks about the overall health of the Chinese economy, and I think this new data adds to those concerns. Slightly better news though in Australia, with business sentiment for July coming in ahead of forecasts at a read of 7. Higher than June's read, which was an 18-month low, which came in at 6. So it's not brilliant, but it's off the bottom, and it's looking a bit more positive as far as business sentiment is concerned in Aussie. Right then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? The crisis in Turkey has seen money flow into risk-off and safe haven assets as fear has dominated greed. However, one safe haven asset has underperformed, and that is gold, which is sold off even as volatility spiked higher. So the question I want to ask here is, has gold lost its lustre? The chart on the right shows London spot gold in navy blue, plotted against the CBOE VIX index in green, the so-called fear and greed index. As we can see, the VIX spikes higher on the Turkey crisis, but gold's downward momentum continued relentlessly. Now that might be due to a rampant dollar. Of course, the strong dollar is not good for commodity prices, but there doesn't seem to have been any move of safe haven money into gold whatsoever. So I think that's something that we'll need to keep an eye on going forward. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning. Thank you for your time.